something we have to do together. If this is truly going to be an effective show, what we're going to have to do is get the information out. So right now, call your friends, call your family, get your husband, get your children, get your grandchildren, get your great-grands maybe.
Get everybody.
Get everybody.
Get everybody.
Call Sister Sulky at the Baptist Church. Tell her to get online. Tell her, listen WRD, 900 AM or 96.1 FM. Also, we'll be taking calls today at our phone number, 215-634-8065. Today, we have a co-host today. We have Myra Parker. Say hi, Myra Parker.
Hello, David Harris, and hello, all of you WURD listeners. And yes, call everybody, tell everybody, especially those folks who think they know everything about insurance.
That's the problem. They don't know.
Because unless they've gone through what David and I have gone through, they don't know. But we're here to help you know.
Right. So I think together in insurance experience and knowledge is, see, I have like 46. How many do you have?
It depends on when you want to start counting from. But yeah, 40 something.
So we're getting close to almost 100 combined
100,
years
yeah. How about
of
that?
insurance experience and education.
How about that?
You ain't going to find that on a lot of shows.
No, you're not.
But you find it here on Insuring Our Way.
That's right.
All right? So we ain't going to waste your time with a lot of niceties, but we're going to talk about auto insurance. We're going to talk about homeowners. We talk about life insurance here. We talk about disability. We talk about supplemental. We talk about all types of insurance. So if you have a question about personal or business or commercial insurance, we're here to help you.
That's
Besides, Myra, she's also a life and health agent, also a property casualty agent, right? So we both carry the same licenses and almost have almost the same experiences. So we're going to start off with on the auto section. A lot of calls that I usually get, I got them on the show last time I was here, and I get them, of course, at my office. A lot of people still don't understand some of the basics of their auto insurance policy. Like I said on the last show, your auto insurance policy is not about auto. It's about health insurance. Part of it is disability insurance. Part of it is life insurance. Part of course, is property insurance. You want to protect your car physically, but also it's also about liability. Trying to prevent somebody from insuring you. So that policy has all these different aspects of it wrapped up in one package.
And you know, David, most people, when it comes to auto insurance and any kind of insurance, the bottom line is all they care about, the price. And they don't understand that you don't get what you don't pay for. And some of those things that you're not paying for, you need them. One of those things that you definitely need is to make sure that your first party benefits are going to cover you in the event you do have an accident, particularly with somebody who may not have any insurance. And I see you've got a nice chart on the board back here.
Yes, I do.
You want to start talking about what all is involved with first party benefits? Because if y'all don't know, understand your first party benefits, y'all, you need to pull out your policies right now and follow along if you can.
Okay, so I brought my magic wand here today. So first party benefits, we can start with what you might consider in Philadelphia or Pennsylvania, a lot of states, you know, your no fault, your basic liability coverage that you need to legally drive. We started with your bodily injury and you have your property damage. I'll call this NYC, and I don't mean New York City. This is not your coverage. That's what it stands. This was somebody else. When you hit somebody else, you see it's 25 to 50,000. Of course, that's to protect them if somebody get hurt in their car. 50,000 property damage to fix their car, or a lot of times now they run into people's houses, taking out fences. Their 25,000 is to fix their property. Right below that, when we start with medical payments, which really is a part of your no fault, they do have a little bit of something in there for you. And most of the policies I see, that's all it is, a little something. Usually it's 5,000, which is the minimum. 5,000 medical payment. Now let me tell you something. You go to the emergency room after accident, 5,000. That's the emergency room right there.
Right.
I know last time I was in an accident, I went there, they wheeled me in and took me to get an x-ray. Mr. Has everything fine. 2 or 3 weeks later, I get a bill, $4,995. $5 less than the 5,000 medical payments I had. And it taught me a valuable lesson, that you need more, if you can afford it, more than 5,000 medical. You probably at least need a minimum of 25,000. And there's a reason for that. I'm going to go back to that. Second is your income loss. Income loss is like a little disability policy you have in your auto policy. Every policy, if I've seen 100 policies, maybe out of that 100, 5 people might have income loss. And if they do have it, it's $1,000 for up to 1 month for a max of $5,000 for the total policy. Now, I don't know about you, but most people I know that work for a living, most of them need more than $1,000, and darn sure need more than $5,000 because you don't know how bad your injury is going to be.
That's
You could be
right.
really beat up. So, getting the max at $2,500 a month max up to a total of $50,000. Now you could take that $50,000, you can just give yourself $1,000 a month or $1,500, but you can go to a max of $2,500. And I've seen, matter of fact, I have not seen one policy yet with this limit of $25,000/50. I saw somebody not too long ago, man, he's one of the callers, and we just reviewed his coverage, and I told him he had a really good policy to stay where he at. Because with Harris Insurance, I'm not out here just trying to make money off of people. I want to give you good advice. If I think you got a good policy, I say, hey, it's a good policy. Maybe you might want to tweak it. Maybe you want to increase your medical payments. Maybe you want to increase your income loss. In this case, I advise him to increase his income loss. He had $1,500 a month, up to $25,000. I told him to increase it to $2,550 once he told me how much he made. Okay? Going back to the medical payments. Okay? You should at least, if you can afford it, and these are really not expensive parts of your policy. Trust me. $25,000 minimum. Why? Because when you are in an accident, and it's a pain and suffering accident, right? And on the last show, I might have talked about the different type of accidents there are, okay? Medical payments apply to all four of those type of accidents, okay? What is the first accident? First accident is you run into something stationary, like a tree. You run into a fire hydrant, okay? There's nobody to sue. It's not about a full tort limit. So you hit something, okay?
Or
but you got
something
hurt.
hits you like a deer.
No, wait, or something got hit like a deer, right? But so in this case, it's nobody's fault. This is your fault. So you get to collect off your medical payments, right? Or the second accident is we call 50-50, where it's an accident, there's no cameras, and you can't decide who was at fault, right? So you still get your medical payments on that accident, okay? You have your third accident, you hit another car, another vehicle, okay? In that case, guess what? Somebody's going to sue you. But even still, you and those people in your car, because we're also talking about not just you, but your family members.
Right.
You know, it could be a guest. You could give somebody a ride home from church or
Right.
something like that.
That's right.
That medical payments will apply to them. Okay, that's what we call them first party. You know, in the movies you see, this is party, the first part, sued by third party. That's what they're talking about. First party is you and your family. Right. You, your family, your children, your grandmother, your mother. You don't know who's going to be in your car. But those medical payments are applicable to them. Okay, very important. And of course, the last accident, the one that you dread, you hit somebody like in the back of the car and you're at fault. Lord, in Philadelphia.
And I've done that
Matter of fact, you
more
have.
times than I want to admit.
Let me see. I don't think I hit somebody one time and they didn't sue. I tapped her and she like said, oh, it's no problem, it's no scratches, just go on your business. I said, oh, thank you. Because in this part of the country, an at-fault accident can raise your rates anywhere from 40 to 60%.
Right.
And some of you listening right now, you might know exactly what I'm talking about. You have some nice, comfortable rates. Bam! You hit somebody. Next thing you know, when you get that
Those
bill, it
rates are
goes up.
gone.
Okay?
Yep.
So in both cases, you're going to get medical payments. And all those scenarios I went over, you're still going to get a check every month if you're hurt. Okay? And the next one we'll talk about, which I know everybody in Philly is supposed to have, uninsured motorist coverage.
Motorists. Yes. Yes.
How many people in Philadelphia don't have auto insurance?
Don't even have a license
Don't
and they're
have
driving.
a license, no registration.
Yep.
They be drinking, they be everything. I heard somebody hit them, and the sister got out with bedroom slippers and pajamas, looked at the lady car like, ain't nothing wrong with your car, jumped back in and drove off.
Drove off.
That would be considered an uninsured motorist coverage because she don't know who that person is. She didn't have a chance to get a license plate or nothing like that. So in that case, in Pennsylvania, the minimum is 15, so it's 15,000 if it's one person that was injured, or 30,000 if it's more. I believe in having a minimum at least 25,000, 50,000 because that covers everybody in your car. Okay. Now in Jersey, they get an extra $5,000. You see, I have right here property, because in Jersey, if you have, and we know something, we used to have this in Pennsylvania. When I first started writing auto insurance in 1991, they had uninsured motorist property damage. So somebody hit your car with no insurance. Your own company used to fix your car, replace you up to $5,000.
Oh, wow.
Right. Then I went to sleep. I woke up the next morning, and Lord, it was gone. I'm like, what happened?
But I bet you they didn't lower the rates.
They didn't change the rates.
No.
So in Jersey, they have that. But I know a lot of you could use that now. You're like saying, darn it, that, you know what? Hit my car. It was parked. Didn't say nothing, kept going.
That's right.
So you know what you do? You call your elected officials. Insurance is state regulated. Tell your elected officials, hey, why don't we put this $5,000 back with uninsured motorist coverage? Because a lot of people out here don't have no insurance. So if they did hit you, you don't only get money for pain and suffering and lost wages. You also get $5,000 to fix and replace your car.
That's right, because how many times do we wake up in the morning and hear about somebody driving down the street and wiping out 4 or 5 cars?
4 or 5 cars.
And nobody knows where they are. I mean, we got some information from the Ring camera, but that doesn't mean you ever get any money out of it.
That's
so.
right. And last but least, not last but least, but last, right here, I'm going to talk about
Underinsured.
Underinsured motors means that the person had insurance, excuse me, but they didn't have enough. Maybe your injuries are so extensive, or people in your car injuries so extensive that their insurance is not enough, and your insurance will kick in another $25,000 to $50,000. And it goes back to a story. And insurance aides, we all have a lot of stories, where a young lady was in an accident. She was a passenger in her girlfriend's car, ran off the road. Her girlfriend ran off the road, ran into a tree. Oh, she had extensive losses. The young lady only had $5,000 of medical payments. At the time, I think she was living with her dad. So her dad had a policy, but he only had $5,000 medical payments. He didn't have income loss, so she didn't get nothing for lost wages. He had uninsured motorists, but he didn't have underinsured. Now, I don't know. No, I do know what company she was. So I won't mention the name. But I don't know why the agent didn't give her both. Because I always saw both as a package.
But isn't it a way to save some money?
A couple
and
dollars.
And they take it off?
A couple, $15, $20, $25, $30 a year. A year?
It's not worth it.
That's not worth it.
It's not worth it.
But the thing about it is, he didn't know that he had signed to not get the coverage. He didn't know that.
I've seen
He didn't know
policies
that,
with
right.
no uninsured
Right.
motorists on there.
Right. Then we have what we call unstacked and stacked. Okay. Stacked, number one, you need 2 cars to have stack rates. Stacks is when you take uninsured motors and underinsured motors and you stack them or you combine them together. So in this case, you would have 50,000 for one person, 100,000 for 2 or more people. Right. Now, I've seen policies where there's only 1 car and it was still stacked. Now, they charge you extra for this benefit. You're supposed to have 2 cars. But if you don't sign the form, right, to not get stack rates, a lot of time the cars are still charged. You don't have nothing to stack, and it should be like an automatic, like a default, but it isn't. So I've seen policies with 1 car on paying extra for stack rates and don't have it. Okay. Now, if you want to save some money, down at the bottom we have combination, right, combinational first party benefits. But that means you can get this whole package. You get 100,000 medical, right? 2,500 to 5,000 loss of income. Also, you can throw in some accidental death insurance, and you can throw in 2,500 funeral benefit. Usually, my thing is you need to get your own life insurance policy.
Exactly.
But maybe you might have some pre-existing conditions. We might talk about that today. Right. Or you got bad health, so you can't get it. So there's nothing wrong with having that. You know the bad part about this that I discovered, Myra?
People don't get it.
There is no beneficiary clause on an auto insurance policy. So what happens? Okay, maybe you're in a bad accident, right? You're laid up, you're in a coma or something. So you got lost wages coming, right? Medical payments probably pay for your stay in the hospital. You have accidental death and dismemberment, right? So who gets this money if you don't have a beneficiary? I don't know. Is it like intestate? You know, it's not in your will. Does it go to probate? Who knows, right? But the simple solution would just tell these life insurance, these auto companies, put in a beneficiary line. That's all they have to do. Here we go again. Call your state representative. Call your state senator. Say, look, because insurance is state regulated, we don't tell them what we need and what we want. A lot of times they don't know that you want that you really need it. So keep that in mind. There's no beneficiary clause of that. So I don't know. People argue over who's going to get the the money for Uncle Bobby, who died in an auto accident. And over 40,000 people die from auto accidents every year. That's a 2025 statistic. Okay? But yeah, that's what we're talking about, first party benefits. This is, I consider the meat and potatoes of your policy. This is about you. Okay, you can always get comp and collision to fix your car, car rental, things like that. But this is it right here.
Right.
Medical payments, medical payments, things of that nature. You really need that.
So what do you do with the person who says, "Oh, I'm good. I don't want my car insurance rate to change because I've got coverage at work. I got my medical's taken care of at work."
Well, I'm not going to argue with you, but so much. I'm going to do the best job I can to educate you. And a lot of times, people will not get these coverages. I've seen policies with no loss of income. I've seen policies with no uninsured motorists. And a lot of time, the policies that I've seen, they didn't understand. It was like, I said, you don't have these coverages, so what is it? Because you have a lot of these go-to companies or online companies trying to make a sale, and they're not educating you on what you need. What you need. And right now, let's take a call. All right? Number to call in is 215-634-8065. 215-634-8065. Does anybody have any questions when we talk about? Okay, no calling. All right, let's go to the next section. And what we're going to talk about a little bit, since we are talking about first party benefits. Myra, by the way, Myra is also a AFLAC agent. Myra, tell us about AFLAC and how it could supplement or add something to your auto insurance policy.
Well, first of all, most people I find don't have any way of keeping that paycheck going if they are hurt and can't work. And I ask people all the time, do you have a fairy godmother? You got a sugar daddy? You got a sugar mama that's going to pay the bills? I mean, even if you go to the hospital, chances are you're going to have to pay something. You've got deductibles on your health insurance. You've got co-pays on your health insurance, David. Right. And most people have no idea. They just are rolling the dice, betting that nothing's going to happen. So there's all sorts of supplementary insurance that's out there. You can start with where you work. Are you signed up for the disability plan that your employer that your employer offers you at work? Don't have the attitude of, I don't want to have anything else taken out of my paycheck, because a lot of times these benefits are benefits that you would have to pay for. But you really need to take a look at your situation. What if somebody hits me? What if I can't work for a few weeks? How am I going to pay the bills? I mean, most people are struggling right now to pay the bills, and they go to work every day.
That's right.
But what if you're not able to work? Can't collect unemployment because you're not able to work. So I urge everybody, if you have open enrollment on your job coming up, sometimes it's in the spring, most of the time it's in the fall, make sure that you have coverage. It's usually cents on the dollar. These coverages are not expensive. You know, you may be crying about what's not in your paycheck, but what if there is no paycheck?
Well,
that's
Myra,
the main thing.
Give us some examples of what type of policies that you can get with AFLAC through your job. And I also heard, and you can correct me, can't you now get AFLAC individually with some products?
There are some products that you can get with AFLAC.
Okay.
By yourself. You can get the life insurance. You can get the cancer protection. You can get the hospital indemnity, which is very handy in the event you are hospitalized and you still have additional bills that you have to pay as a result of being in that hospital.
Okay.
There is an accident plan.
Accident.
Accident.
Now that sounds familiar. We talking about auto insurance.
And you can cover yourself and your family members with the accident plan. Now, if you're able to get AFLAC through your job, you do have a few more coverages that are only available through an employer. But accident is one that you can get on your own, and you can cover yourself and family members. So if somebody cuts themselves while they're cooking or falls out of a tree and breaks their arm this summer, you have something to go to the emergency with, because AFLAC will pay a benefit if you go to the hospital or if you go to urgent care. So you don't always have to be hospitalized in order to get a check from the duck.
Okay. All right. Sound like some good products. Sound like something that our listeners should definitely have. Are these expensive products?
They're not expensive, David. We usually, the ones that are available through payroll deduction, often they're less than $10 a week.
Wow.
And most people, you know yourself, folks, You go to the ATM, what are you pulling out? A $20 bill?
Yes.
Usually that's the smallest bill you can pull out of the ATM.
Right.
So you can get maybe 2 benefits a month for
Right.
$20. It all depends on your age, and it all depends on which benefit you want.
Okay. All right. So since we're talking about accidents, one thing that I do usually before the show, so this is my second show. So since my first show and this show, a couple of things have happened in the Philadelphia area, but these particular incidents that are happening have a national type scenario. Okay. So, oh, wait a minute. We have a call on line 1. Is that Spread Love? All right, Spread Love. Spread us some love.
China's love, manners, and respect. How are you today?
I'm doing fine, my friend. How are you today? And welcome to the show.
Thank you. Give thanks for the show. And, of course, we spread love to the Empress there with you. How are you today, sister?
Oh, she can't hear. She's doing well. She said she couldn't hear you.
Okay, I can't hear myself sometimes. Okay.
I'm sorry, Spread Love, I can't hear you.
No, don't worry.
You're going in and out.
What's your question? How can we help you today?
She's probably better off not listening. First, I'd like to spread love to our brother Nicholas on the boards, always doing an amazing job.
All right.
And spread love to the entire WRD family, everyone out there working to make it better, everyone suffering, and everyone working to keep it from getting worse. But we always got to spread love to everyone incarcerated, especially all incarcerated falsely and unjustly. Free Mumia, free us all.
Okay.
I just had a couple of questions for you, please.
Sure.
Thank you. That you don't have to address in today's show. Whenever you'd like to, I think it may benefit the people to find out.
Okay.
And this is if you think it's useful. If you don't think it's useful, just let me know flat out.
Okay.
All the famous names we're aware of with the commercials, are there any ones or any one-on-ones that you would recommend, A, for either complete, comprehensive, one-stop shop, or B, itemized, like, yeah, this company's best for, say, auto, this company's best for, say, homeowners, property and casualty, this company's best for life. You know what I mean?
Yes.
To make it simple for the people, if you ever worthwhile and it doesn't conflict with what you're doing.
Well, yeah, basically, I do not endorse any particular auto, home, or life insurance companies. At Harris Insurance, we represent anywhere from 10 to 15 auto and homeowners companies, anywhere from maybe 15 to 20 life insurance companies, disability. Of course, we do commercial and business. So basically, if you go on my website sometimes, and my website is listed, I don't know if you're listening or also you can see us. But if you can see us, you can go to my website, either autoinsuranceGame.com or Insure with HIS. It's a couple companies out. Now, one call I remember getting last time, they talked about this thing where they say you can get auto insurance as low as $59 a month. And that's usually some kind of ploy just to get your information. And they always list all these different companies out there. But if you look at the ones that usually run commercials on a regular basis, they're good companies. I don't think is anything. I don't think there's really a bad company. I think sometimes you have maybe an agent who's not maybe looking out for your best interest because maybe he's not educated enough. You might have a bad claim adjuster at a company which gives you a bad experience. But the company itself, it's really hard for me to say that. But maybe in the future, if those companies start advertising with WRD, but I don't see any reason why we should give free advertisement to any company that don't advertise with WRD. So we got to look into that.
I hear you.
All right.
100%, and I thank you. The other question I would ask, not on this show, but whenever you'd like. I was made aware on I think it was on 2020 or one of the news specials.
Right.
They did an in-depth on how employers take out insurance on their employees.
Yes,
and,
I saw that. Yes.
All right, tell me, how if somebody got like that, how can they, I guess the word de-got themselves, you know what I mean?
Right.
So that if there is a benefit, that benefit goes to the family as opposed to the employer, if that's possible. It don't got to be on this show, but whenever you want to, tackle that for the people.
No, I could talk about that's a lot. I did see that particular show, and I think they were even calling the people peons. I mean, behind the scenes, they had these really negative views of the employees. But, yeah, they were getting 10, 20, 30, 40, 50, $100,000 policies. And there is a type of life insurance policy out there that you can get on somebody without them knowing it. Usually those policies deal with maybe some type of debt, like you owe a bank, or you might be in some kind of partnership. And they're really specialized policies, kind of like, you've heard of the Lloyd of London policies. A lot of companies don't do those, just a handful. But I'm trying to remember from the show, is there a way that you can find out? Now, you do have the National Association of Insurance Commissioners. That's a way you can search to see if one of these life insurance companies have a policy on you, as long as you know the person's name, date of birth, and social security number. A lot of times I give out information. People say, oh, my grandmother died. We know she had a life insurance policy somewhere. We don't know. How do we search it? So you could go online to the National Association of Insurance Commissioners, NAIC, I believe, .com. You might be able to do that to find out if one of these corporate companies have a policy on you. But, I'm going to make a note of that, and I'm going to do a little research on it and see on the next show if I can give out some more information on that. Because I think it is bad. Because I think from that show, these people were dying from all kind of accidents, and it wasn't always on the job. It was off the job, car accidents, or just dying, period. And the companies, I would say, they were profiting from these employees passing away, and the families didn't know. And a lot of times the family needed the money.
Right.
You know what I mean? So that's a really good question, and I'm going to look into that. That was a good show, too.
Okay, thanks, and thank you for your show. I'm going to hang up and let y'all keep rocking.
You're welcome. Thank you very much for calling.
Thanks for your call.
Yes, very much. Usually between the first show I remember we had, I saw something in the news. It was reference to homeowners policy. It was something called line service. And I got some good feedback on that. That's when your sewer line or your water line between the city main in the middle of the street and your house, something erupts, whatever, and basically you're responsible for paying for it. Now, you can get that coverage on your homeowner's policy. It's called service line, or you can get one of the local water company programs that'll cover your water and your sewer. The one in your homeowner's policy, if they have it, is better. It's more comprehensive than the one that you get because it covers some other areas too, not just with water and sewer, but also with electrical and maybe cable or something of that nature. Now, since the last show, it was a bad car accident. A couple.
Which one?
I know. One was in my old neighborhood in West Oak Lane, and it was a young man. I think he was a teenager, 16 or 17 years old. He had his friends in the car, and he ran a stop sign, and he hit a senior citizen who was driving, and I think she ended up in the hospital. Car tore up. But I remember he saying that the car was not stolen. So the question is, did he have permission to have that car? And if he did have permission, what's the ramifications? Now, all of you out there who have teenage children, matter of fact, I have to do a whole program on how to insure younger drivers. Because one of the calls that I get is, Mr. Harris, I have my son or daughter, they're 16, 17 years old. I want to put on my policy. I really don't want them out there at night coming from McDonald's on public transportation. But I called up the company and they said $2,000 more a year. Mr. Harris, I just don't have that kind of money, or they're in college. Well, I want them to drive while they're in school so they can have maybe a part-time job, earn extra money. I want to add them on my policy, $1,500, $3,000 a year, So
what are people supposed to do?
I don't know.
People just don't snap their fingers and have kids start driving.
In my book, Surviving the Auto Insurance Game, which I forgot to bring a copy today to put in front of here, I have 30 strategies to lower your rates. And one of those rates dealing with young people. Now, sometimes it's easy. And since we do have time, do have time. Sometimes it's easy. And I'm trying to remember what strategy it was to deal with young people. I think it's the fifth or the sixth strategy. But anyway, if you get the book, right? You can buy the book at autoinsurancegame.com. If you get the book and look at one of the strategies, and I'll make this quick because one other thing I want to cover, and as well as helping people save money. But this is a real important one. Serial number one, you're divorced. Husband lives over here. The wife lives over here. The son, let's say a son or daughter, mainly lives with the mother. Okay? Now, I had a scenario like that. Somebody called me, and I said, well, what about dad? Well, we fine. We have a good relationship. All right. I said, where does he live at? Well, he's kind of back and forth between both houses, I'm like, all right, so what do you want to do? Well, I have a car, and I want him to drive it. I'm like, well, if he lives with his dad half the time, he can have his license at his dad's house and drive your car. Long as he has a valid driver's license and really say he's not licensed at your address, he's licensed at
He's
the
licensed
dad's
at the other
address.
address,
There you
right.
go. Right. Or I had a scenario, father and daughter. So what happened was they took the daughter off of his policy because he had a Lexus. He had two Lexuses, right?
Okay.
And she had she didn't have like a Hoopy, but she had a older car, like a 2009, 2010.
Mm-hmm.
What most people don't know, auto insurance companies rate the youngest person on the most newest and expensive car.
Oh.
So they'll take a 16-year-old and rate the Lexus on the 16, not the 45-year-old parent.
Right.
That's how you end up with these $2,000 rate. So I
Right.
said, what you do, you get a separate policy, right? But you and your daughter on it with the hoopty, right?
Okay.
Now the parent has some of the discounts that I talk about: prior insurance discount, homeowners discount.
Multiple.
Right.
car.
If you don't want to do the thing, with changing driver's license, stuff like that, so you isolate. You get the daughter on this policy, and you tell the company she don't drive the other two cars. If you want to sign exclusion form, let's exclude her. She don't drive those two Lexuses. She drives her car. And for some reason, maybe you're taking a trip down south, okay, and maybe you want that younger person to drive. Just call your agents and put them back on the policy for a week.
So it's just for a week.
Just for a week. Then when they get back, take them back off, put them on the other policy.
And that's a way to have a big savings. If
A
you're
big
not
saving.
paying
And
for it.
legally do it, because what happened is we're talking about these first party benefits. So trust me, if your son or daughter, they in school or high school or college, and they have a part-time job, they get hurt. They need that part-time money. They get from working at Starbucks, whatever. They get the income loss. A lot of people forget about that. Also, how many times are we going to talk about hit and runs in Philadelphia?
Oh, well, every
As
week.
pedestrians and bicycle owners, don't you know that falls under your auto policy if you're struck by a vehicle? Okay? So be conscious of that also, that those first party benefits are applicable to you walking, your kids playing in the street, or riding on a bicycle.
And David, let me just ask you this before we take May, who's waiting on line one. Thank
Sure.
you, May.
Thank you, May.
What happens to somebody whose child drives for the summer and then goes away to school and they're gone basically 6-7 months of the year? Do you have to cover them for every month, or do you only cover them when they're home?
I don't know about you, but let's talk about my own children. Right? I have two children.
And they both went away to school.
They both went away to
Right.
school. I said, change your address to the school. You ain't here.
Okay.
You only here a couple times, 2 months out of the year? You live on campus. Change your driver's license to campus, and you can still drive my car because
Okay.
you're my child. You have my permission. All right, you got a valid license. You my child. You can drive my car as long as you have my permission.
Right.
So that's what I did, and I've saved hundreds and thousands of dollars with both of my children because they both lived on campus. Bad enough, I got to pay $1,000 in tuition, But I don't
have to
want to
pay
keep May.
car
Right, I
insurance.
don't want to keep May. But that's another strategy too. All right, let's take May. Hello.
Hello.
Hi, May. How you doing today? Thank you for calling Insuring Our Way. How can I help you?
Well, thank you so much for being on the radio so I can get some information. Now, I don't know. I would love for you to be able to help me. I had an accident. I was parked. My car was parked, and the person came down, hit the car, and kept going. So I had a young man that stays with me was parking because the car was sitting out just a little bit, and that's what he was doing, pulling in. It wasn't sticking out that much. So I think it was the damage to the wheel and to the front fender and on the left side. I have a you call it, person who saw it, you call it, a witness across the street who's on the police, and I have the police report.
Okay.
So the young man, I couldn't drive it. He rode the car, wobbled it with the wheel wobbling down to the corner, and the lady was down there inspecting her car at the corner. So he told me that he had my insurance card because I told him it was in the driver's car. He told her that, and he said, "Can he see hers?" So she said, "Well, it's on my phone," and she said some mean things and called him a name and said, "I'm not a broke, whatever." And so she would not present her. The next thing I knew, I think this was the next day, she had gone to the police. So a police officer came to my house and was, asking me about what happened, etc.
Okay, wait,
well,
wait 1 second. Right. So you said your car was parked
Yes,
at the
it
time it
was.
was hit?
yes.
Was somebody inside of the car?
Well, the young man that I was asking him to, but he hadn't even started doing anything. He had just gotten in there to pull it back in, because the front end was just out just a little bit.
He was kind of like parking your car for you, like, or trying to get it in the spot, right, so it wouldn't stick
trying to
out.
straighten it.
Right, trying to straighten
Right.
it for you. Okay.
That's right.
Okay.
Right. And so my witness saw it. That this lady, she was speeding down the street.
Right.
So
And she hit the car while the person was trying to straighten into the parking spot.
well, they were sitting there. He hadn't really done it. He hadn't even started it.
Right.
Yeah. So, okay, I got a lawyer, and the lawyer hasn't done. Now, that's another thing. I mean, should I change
All right.
the lawyer? Because
All right, so let's go back. Okay, the lady hit your car while it was basically parked, right?
correct.
She went and got she went and got an attorney.
He went to the police.
She went to the police, filed a police report,
Yes.
Right.
She did.
stating that. Did you ever see the police report? Did it state that she was saying that your car was in motion or it hit hers or?
You know what? I have the police report, but I know exactly how it's worded. But it just says this person did this and that person did that. Okay.
All right. So you got it. So what are you trying not to do? You're trying to make sure this accident is not considered chargeable, or you're trying to get your car fixed. Or
I called 3 top lawyers. You know, I'm not saying the names that are all represented on the video. And they're all saying, well, there was no injury. And it's
Right.
like, so I'm saying I don't get any help for my car from a lawyer.
No. As far as your car being fixed?
Yeah, I mean, to reimburse for the damages.
That's going to come either from your policy or from the lady who filed a police report, because technically your car was basically parked. And that accident was probably maybe more like 70%. And a lot of time in accidents, sometimes it could be a percentage. They could say, well, the car was parked, but, maybe the gentleman in it, moved it a little bit. They don't really know. So, but mainly the car was mainly parked in a spot, and she came too close to your car and she hit it, right? If you have her information, you should be going after her company to repair your car. Do you have full coverage on your car as far as you have, comprehensive and collision?
I didn't. Now, here's the thing. The well, I don't want to say the name of the insurance company. However, the representative for this insurance company said that this is August, that I had, the underwriters had dropped me. That was like 2 days before the accident, which is weird. So
the car wasn't covered at the time of the accident?
Yeah, he said that the underwriters wouldn't. They
what?
Took or wouldn't cover me or something, or dropped my coverage.
The insurance agent told you that, or somebody from the company?
Yeah, sure. That was okay. I'm good. I said because of a payment that wasn't made in May. Now, it could have been some kind of problem with the banks or something, because since May, this happened in August, I've been using my insurance. I used it and had it reinstated twice.
May, can you do something for me? Because this sounds like we need a little more investigation. Yeah. Can you give me a call if I give you my number?
Oh, yes, sir.
Okay. So you can call 866 985
985. Okay.
84
68.
68. Right. Sound like you're getting a runaround, and I'm kind of get the impression that something might not be right between the agent and the company. What they tell you 2 days before the accident, you don't have no coverage. That sounds a little fishy. So I'm writing your name down, and I expect you to give me a call. And when you call, I'll remember you, because I'm making notes in my book right now. But I'm sure I can give you some pretty good advice on this particular situation.
Okay, wonderful. Thank you. Johnson,
you're welcome. Thank you for calling.
Last name is Johnson. Do you have all?
May Johnson. May Johnson.
I got you.
Okay. All right, Ms. Johnson. Matter of fact, you can call that number right now, because it's an answering service, and they can take your information. All right.
Okay.
So that's
very good. Yes.
So that's 866 985-8468. That's anybody listening. Anything you need from Harris Insurance, you need Aflac, auto insurance, life, home, whatever, give us a call right now.
Or if you just need
24/7.
a consultation on what you have so that you can help understand what you have better.
That's right. 866-985-8468. Thank you very much. And that's it. We have any other callers on? Okay, then. All right. So one other thing I want to cover, and let me see if I can hurry
We've
up
talked
and do
about
this.
the kids. We've talked about the
Right.
first party. What else you got?
I have a strategy to help people save some money. This is one of my best strategies. Like I said, out of my book, Surviving the Auto Insurance Game. You can find it on Amazon or go to the website, autoinsurancegame.com. I'm telling y'all people, y'all just throwing money out every week.
Well,
If you don't
David,
get
you
that,
know,
I don't know what to tell you.
You know the saying goes, if you want to hide some information from somebody, put it in a book.
Put it in the book. Oh,
So
well.
you
What
know
can
how
I
you
say?
know how I feel about my books.
All right. So here we go. This is
30 strategies.
to lower or maintain your premiums out of Surviving the Auto Insurance Game. Chapter 3, strategy number 8, right? Increasing your limits of liability, all right? So I've done this for private clients. They've called me, they told me what they had, and I said, this is what you need to do for me to maybe save you $100. In some cases, I've saved people $800, $900, $1,000 a year by doing this one simple strategy that they didn't know, okay? So first thing, suppose hypothetically you have minimum limits, 15, 30 bodily injury. On the other example, I had 25,000, 50,000 bodily injury. Okay, and you also had your property damage of 5,000. Okay, what you need to do, and this was some people like, what are you doing? Increase your first party benefits bodily injury from 15, 30, and 5, maybe to 100, 300,000, 25. So that's 100,000 if it was one person in the car, 300,000 if it's more than one person in the car. You increase it from 15,000, 15, 30, or maybe you have 25, 50. Maybe you got 50, 100, right? But if you increase your limits, and this is only while you're shopping. Of course, you might want to increase anyway to have more coverage.
Right.
But this is a strategy to get you lower rates. But a lot of people don't know that because a lot of people already, I have clients who already had 100, 300. I had a client that had 250/500,000. She was a medical professional, so she wanted to make sure if something happened, she's protected from any kind of lawsuit or things of that nature, okay? When you shop around, companies will give you a lower rate if you carry higher liability limits. It sounds like backwards. Well, wait a minute. Don't I get a lower rate if my liability limits are lower? No, not when you're shopping around. The new company will give you a discount. Now,
Okay.
when you increase it, let's say from 15, 30, and 5,000 to 100, 325, or 250/500,000, that's why I had to print this out because, it's kind of abstract. Wait 5 to 7 business days for the reporting agencies to update their system. Well, this is a whole nother show when it comes to reporting agency, but if you didn't know, there are several agencies out there that keep track of all your insurance, right?
You do, yes.
Now, there's one company called LexisNexis, and they're like one of the main reporting companies, right? They keep all this information on you going back 7 years. 7 years of all the companies you with, the amount of coverage you had, your accidents, your payment history. They also have where you lived at since you were 18 years of age. They had my college address in this report. They had all kind of stuff. My report, it took me like 2 years to finally order a report, right? 140 pages of information.
Wow.
140 pages. This agency I never heard of before I started doing auto insurance. So here we go again. 5 to 7 days, they'll upgrade it. Because a lot of times when I do your quote, your information pops up on my screen. I put your name, address, date of birth on there, and it'll say, like right now, it'd say hypothetically you with Allstate. And it says like you with Allstate for 3 to 5 years. And your present liability limits are 15, 30. That comes up on my screen. That's already know what you have, right? Now, if you increase it, right, call your agent. Can you increase my bodily injury limits from 15, 30 or 25, 50, 100, 300, right? You wait 5 to 7 days, wait for that report to update, right? Third, now start shopping because you've already increased your liability rates, but also that's going to increase your premium. But you're only going to maybe pay it for 5 to 7 days. So you got to time it right. So for my own clients, who I do it for is easy. I increase their liability limits, right? I'll wait 5 days. I do a little dummy quote to see if the system is updated. Once it's updated, bam, now I start quoting all the different companies. And like I said, I've seen rates go down $4, $5, $8, $900,000, especially if you got multiple cars, especially you got accidents, things of that nature. So, like I have on, you can save up to 40%. Your new quote can be $100, $300. When you shop around, you don't have to tell the agent, well, just give them the basic information for your quote. It's going to pull up that you have this higher limit, which is going to give you a lower rate. Now, do you have to get 100, 300? No, you can get 15, 30 with the new company, or 25, 50, right? Because you're trying to save some money, right? So, number one, in order to do this, you have at least have 6 months of insurance, right? You can't have it. You can't say, okay, Mr. Harris said I can just increase my rates. No, you need some things you got to do first.
Right.
You have to have a policy of at least 6 months consecutively with no breaks in it.
Okay.
That means no cancellations, no 2 weeks you didn't make a payment, no reinstatements. Well, you got a reinstatement without a lapse in coverage.
Okay.
That's another strategy. See, so much I just learned. I'm just giving off information. If your policy is canceled for non-payment and the company want to reinstate it, make sure you say reinstated with no lapse in coverage.
Right.
That way you have the continuous coverage. That's one of your biggest discounts, right? So 6 months. If you had accidents or violations, oh yeah, you should definitely be using the strategy. If you have young people on your driver, we just talked about young people. If you have them on your policy, a great strategy to do that. And seniors, okay, you on fixed income. You know, I did a quote for a senior citizen last week, and I think she was like 84, 85.
Oh, wow.
And I did a
driving.
quote.
That's
It was
wonderful.
a quote. I saved her some money. But so out of curiosity, I did a quote with her being 20 years younger. Out of curiosity, I changed the date from 45 to 60. That's curiosity. I just want to find out.
Just to see.
It was $900 a year difference
Wow.
between a 65 and somebody almost 85 years of age. What happened to the good old senior citizen discount? You know, you senior citizens save money. $900. And Myra, I did it with 3 or 4 companies just to see, well, maybe this other company's a fluke. One company was $800 more, one company was 9 something, one company was like $850. I was like, unbelievable. Unbelievable. And this
So now
somebody
let
with a
me-
clean driver
Let me
record.
ask you, if somebody's going to follow this strategy, because
Yes.
most of us we get rated twice a year. I don't know, is there anybody out there that gives you one rate for the entire year, or is everything subject to 6-month intervals?
No, one of my strategies, one of my 30 strategies is, should you get a 6-month policy or a 12-month policy,
Okay.
right? All depends. Now, if you have a clean driving record, no accidents, no moving violations, I would get a 12-month policy. That way I'm locked into that premium
For a year.
for a year. And some of you out there, those who can financially afford it, a lot of times you pay 12 months up front.
Up front.
Okay? So if you have an accident, let's say your policy is from January to January. You have an accident in March, right? A chargeable accident. Okay, you hit somebody. The company has to wait 9 months to increase your rate.
Okay.
Right. Now, if you had a 6-month policy, right,
Get you the next time.
they'll get you in June. Right.
Right.
So it's a reason why a lot of these companies only have
6
6-month
months.
policies. I ain't gonna mention any names.
Well, I have one that only does 6 months. So every February and every August, I get my new insurance cards and I get something with a rate. Now they
Right.
usually only raise you once a year,
Right.
But they can raise you twice a year.
Absolutely,
So with
absolutely.
somebody that has a 6-month policy, when's the best time for them to shop for rates?
If you have an accident, an at-fault accident, or moving violation that you're in a hurry to get off your record, because now it's a time thing. Okay, fine. You have an at-fault accident, say, because basically in Pennsylvania they can surcharge you for up to 3 years for an at-fault accident or maybe a moving violation. Okay, so you're like really want this accident to come off, so you can save, trust me, hundreds or maybe thousands of
Right.
dollars.
Yep.
So here we go again. Instead of January to January, it's January to June. The accident falls off in July,
Okay.
right? So you don't have to wait another 4 months to January 1st.
Okay.
Or in some case, suppose the accident falls off in February. Okay, if you had a 12-month policy, you have to wait till February 2027.
Okay.
But if you had a 6-month policy, you only have to wait till June.
Okay.
Right. So sometimes it's better to have a 6 if you're trying to get something off your record. Other than that, I would say 12-month policies. And it's only a handful of companies that do 12-month because it's more profitable for these companies to give you a 6-month policy because, like you said, they can raise your rates.
Right. And you know what? This is just one of your strategies. This is the number 8 strategy. So folks who are listening out there, you definitely want to go to the website and get David's book because this is a lot of information and we fortunately have a place for you to refer to it. So invest in yourself. Get this information. That way, if you have a question, you certainly can still call Mr. Harris. He's available to take your calls and help you with get your information. But you can also have some ready reference material in front of you.
Right, right. Oh, you know, Myra, I forgot about the accident. The 2 accidents. The one where the young man had 4 friends in it. Now, going back to the other scenario, those people in the car with that young man, the 4 friends, I think they got thrown from the car, whatever. That goes back to the parents, whoever owns that car.
Yes.
If he had permission to drive that car, then that goes on their policy. I don't know how much coverage they got, but if they only got minimum liability, they like the girl that ran into a tree.
Right.
Now, the lady that they hit, bodily injury. Hopefully, they had maybe 100, 300, because they tore her car up and she got hurt too. So she's going to sue them for pain and suffering. So they need coverage for that. But
I think we have
also,
another call.
uninsured motors, what we call underinsured motors. Maybe they had coverage was not enough. So that's why it was good to have those first party benefits. This is about you. You can't depend on people out here, especially in a lot of these urban areas. It's a national show.
Right.
So we talking about Chicago, Philadelphia, Jacksonville, Houston, California. I mean, not California, but Los Angeles, Portland, Detroit, whatever. You know, any urban area, trust me, the high insurance rates and people can't afford it because gas costs too much, and that's making it worse too. All right, we have a caller on the line. Yes? No.
Yeah,
Miss Sandy from West Oak Lane on line 1. Miss Sandy, are you there?
I'm here.
Welcome to Insuring Our Way, Miss Sandy. Thank you for calling. How can we help you today?
I'm that senior citizen you were talking about.
No. No. The one with the car load for the teenagers hit you?
No.
Oh.
No, with the rate.
With the rates going up.
Oh, the rate's going up every 6 months.
You put 1945 and then you put 1965, I think.
Right.
Oh, wow.
But I just want to know what the listeners can do to get you on the air once a week.
Well, you can call the station, talk to management, say, hey, we want to hear Mr. Harris more frequently. Maybe do a better financial deal for Mr. Harris so he can financially afford to be on this show more than once a month. But yeah, let them know. Let them know that this information is very important information. I just mentioned in jest about gas going up. Well, your insurance going up 26% a year. Now your gas going up. People need the transportation to get around. It's freedom.
They do.
They do. Especially the seniors. Like say you on fixed income.
Go up because of the gas prices.
It is. But insurance, like I said before, is state regulated. So you can call your council people, let them know. But basically, your state senators, your state representatives, right? Let them know. And I will be sending information packages out over the next month to all the different state representatives and state senators about things they could do to help you out. Yeah, I had this package for a year sitting on my desk, but now since I got the show, now I have a good platform to get it out there.
Now, David, you've talked a lot about Miss Sandy. Did you have another question?
I just want to thank Mr. Harris for being my insurance rep.
You're welcome, ma'am. Thank you very much.
Thank you.
Thanks for calling.
All right. Thank you. Bye-bye.
Now, David, I know top of mind is always car insurance because most of us drive. We got to get from point A to point B. What's going to be on your next show that we can look forward to hearing about?
The next show, we're going to talk about life insurance with living benefits.
Oh, my.
Living benefits. I was
one of my favorites.
Yep, I stopped at the health fair that they had sponsored by the Links today. Enon today, right? And all the different.
Shout out to Enon for having that fair.
Right, and all the different providers that with a lot of good information. Who I didn't see there, I didn't see Aflac there. Right?
I didn't know that.
And of course, there's nobody there. Life was talking about living benefits. Now they was talking about cancer and heart attack and stroke. But now we're going to talk about a way that you can have like what we call a 3-in-1 policy. It could take care of critical benefits like heart attack and stroke, a death benefit, cash value, and possibly even disability. So that's going to be discussed next show, besides always talking about something with auto or whatever current event might happen. Because, there's an accident every second in this country.
I can
and since
imagine.
the first show and the last show, over 2,500,000 people had an accident since the last show. And some might be some people you know.
That's right.
All right. All right. Well, I'd like to thank everybody for another show. I'd like to thank my co-host, Myra Parker, for joining me. And I'm sure Myra come back if I ask her very nicely.
I think I can make
Do
myself
I have to
available
pay you?
for
Do
that.
I have to pay you?
Well, we'll work it out. I don't know, cup of coffee here and there. To all you listeners, please reach out to Harris Insurance Services. Go to the website. What's the website with the book, David?
Website is autoinsurancegame.com. The other website, if you can see it also, is Insure with HIS. And don't forget the number. You can call 866-985-8468. Thank you very much for a very exciting show of Insuring Our Way, doing this together. And don't
Insure Our
forget,
Way.
this show will also be posted on the auto insurance website within the next week. So if you missed it, you can see it, not just hear it, on the website, autoinsurancegame.com.
Awesome.
All right. Thank you very much. Have a blessed day.